is the Angel Next Door podcast, where we will talk about all things angel investing, what it is, who does it, how do we find them, what does it mean to invest in an early stage company. If you have ever wondered how you can affect the change you want to see in the world, then tune in to learn more. In this episode, I'm talking with Yaniv Sneor, co-founder of Mid-Atlantic BioAngels, to demystify the intriguing world of early-stage investing in the life science space. Yaniv shares a wealth of knowledge about the unique complexities of investing in the life science sector, the evolution of their group, and the innovative practices they've implemented, such as their versatile investment pools and the international scope of how they operate. With a mix of specialist insights and inspiring success stories, this episode not only sheds light on the critical role of angel investing in advancing life science ventures, but also details the strategic moves that have led to significant returns. Enjoy the show. Well, hi, Yaniv. Welcome to the show.
Hi, Marcia. Thanks for having me on.
Well, I'm excited to hear from you today about a lot of the things that are going on in the life science space. We haven't really talked that much about life science lately on the podcast, so this is going to be great. I know it's such an important topic, such an important space. I'm really excited to hear about the Mid-Atlantic BioAngels and all the work that you're doing, but you're doing some very interesting and creative things too. So we want to get into all that. So why don't we start out by having you tell us a little bit about how you got started in angel investing, how you knew about it, or how you started Mid-Atlantic BioAngels, or how it got started from the beginning.
Yeah, so originally two partners and myself started Mid-Atlantic BioAngels because we felt that the life sciences require a very specific and broad set of expertise in order to properly invest in them. It's a really difficult asset class to diligence. And we felt that you really need a lot of expertise around the table to do that. So we thought that if we created a group that specializes just in life sciences, we might be able to attract a membership that's more interested or specifically interested in that type of asset class. And that would allow us to do better diligence and invest in these kind of companies. So our two partners have since retired, but so I'm the last man standing. But we decided to create this group. We called it Mid-Atlantic BioAngels because the majority of our members in the beginning were from the Mid-Atlantic area. But since the pandemic, we've removed all geographic restrictions on membership. And since we went so narrow in terms of our specialization in terms of investing, we went very broad geographically. So from the beginning, in order to have enough of a deal flow, we went worldwide. So we've always been accepting applications.
Wow.
We've been doing Zoom since before the pandemic because companies would always pitch to us from overseas. And so Mid-Atlantic became sort of a misnomer, but it's how we started, so we've kept the name.
That's great. So tell us a little bit about how you find companies and invest in them overseas. How do you find investors from overseas? That's something we don't hear about very often here in the US.
So we spend a lot of time at conferences for the life sciences who more often than not welcome having investors as part of those conferences. And we spend a lot of time meeting with potential syndicate partners, others maybe small VCs or family offices and other life science focused groups from around the world. We meet with a lot of companies who are looking for funding from all over the world, talk to them about our investment criteria and what we're looking for. And we try to create a relationship for co-investment, and we try to increase our exposure to the world and to companies who potentially would be interested in having us fund them. And since we are so unique, in our specialization, there are maybe a handful of us over in the world who do only life sciences. There are, many angel groups that also do life sciences, but they're usually generalists. But we're specialists, and we do primarily sort of the deep end of the pool. So more on the therapeutics and devices and a little bit on the digital health and diagnostics.
Oh, that's very interesting. So how many members are there? How do people get involved? And then how do you deploy capital? Is it through direct investments? Everybody writes a check, or do you have funds, or how does that all work?
So we have approximately 60 members. The majority of our members are from within the life science industry. Many of them are either people who are doing commercial work within pharma or device companies. Some of them are small CEOs. I mean, CEOs of small companies, biotechs. Some of them are involved as consultants in regulatory or things of that nature, or human resources, finances, but people who have an interest in and a stomach for the life sciences. People can always write their own check if they want to. But a few years ago, we created an internal fund that we call a pool, and that pool votes, and the members of the pool, and the majority of our members belong to the pool. The members vote on how they want their assets deployed, and that creates actually a really nice environment within the group. It's very catalytic to a lot of engagement with members. And then several years ago as well, we created what we call a sidecar fund for people who told us, we like the fact that you have all this expertise dedicated to life sciences, but we either don't have the time or the expertise to be able to join the group, but is there any way we could possibly co-invest with you? And for them, we have a sidecar fund. So for people who just want to basically index our investments, and that fund works on a rules and ratios base. So basically there are thresholds. If the thresholds are met, the sidecar fund automatically co-invests with us, and it invests with us on a ratio similar to us. So it's a bit complicated, but we have rules for the pool as well in terms of diversification and things of that nature, which we maintain for the sidecar fund as well. And the goal really, as you know, as an angel investor, is to create a portfolio of companies where you invest in multiple companies. And that's what the way the pool works, and the sidecar fund where you have exposure to multiple companies. And so the diversification limitations carry from the pool to the fund as well.
Oh, that's super interesting. So tell us about some of those rules or triggers that have to happen in order to get the sidecar fund to invest.
The sidecar fund invests in, so the idea behind what you consider a successful angel investment opportunity is where multiple people consider an investment and decide that it's a good idea when it's been discussed internally and there is more than one person involved. So we consider a MABA investment to be an investment where either the pool decided to make an investment, because by definition, it creates a plurality of opinions. We had to vote for that thing to go forward. Or if at least 3 members wrote an aggregate $150,000 or more in checks for the company. So in all cases, you have a plurality of people who did diligence, decided to put in at least a threshold of a dollar amount for that to be considered a MABA investment. When that happens, the sidecar fund automatically co-invests, and it maintains, as I mentioned, ratio. So when we put in a capital contribution into the pool, the most the pool can invest on our behalf is 20% of that capital contribution. So we're guaranteed at least 5 investment from one capital contribution. If we like that company, we can also always write an additional check and increase our exposure to that company. But at the maximum on our behalf, the pool can only put 20%. And that rule is the same for the sidecar fund. If the pool puts in 20% of the individual's money, then the sidecar fund is limited to putting its maximum of 20% of the individual's money. So likewise, the sidecar fund the maximum it can invest is that 1/5 of each person's investment. If the pool votes to put in less than that maximum, then likewise the sidecar fund would invest less as well on the same ratio as us.
Oh, I see. Oh, interesting. So talk to me a little bit about like the process of doing diligence, because I know I'm not a science person, but I am always fascinated and totally intrigued by all life science companies that I see, because I think, oh my gosh, these companies are doing such amazing work and they're really trying to solve some of the problems that we really need solved, like treatments for diseases and all kinds of wonderful things. But I mean, it sounds like you have this amazing pool of members that have all of this different level of expertise, and that can help you then with the diligence process. Is that pretty much how it works?
Yeah, and that's actually the key to the group's existence. I would never invest before I heard the opinions of all the other members in the group, because there's just so much that you need to know, and it's so difficult to do it on your own, and possibly impossible to do it on your own. So the idea is that you have all of these people with different levels of expertise in different areas and all of them contribute to it. So to give you an idea of sort of our numbers, of every 100 companies that apply to us, only 22 make it through the pre-screening process. So 78 are already pre-screened out. And by the way, we do get back to all the companies with the general reasons why we said no, because we want to provide them with an understanding and with a reason or a tool to come back to us in the future if they've addressed it. So
Sure.
of those 22 that present to us either over Zoom or in person, maybe a half or 13 or 14 companies will move into diligence. When we move into diligence, we create an internal room inside our communications platform. And in order for us to move into diligence, at least 5 person and a lead need to be there, need to say they're interested. So we create the room. We post all of our comments from the post presentation discussion in that room. And within a week of the company's presentation, we want to send the company the first set of questions, and those are the go-no questions. We want to be able to, if it's critical, we want to be able to address it up front and not have to spend too much time in diligence.
Sure.
So let's address those main questions first. And then, if we get back responses and we like it, we go back and forth between us and the company. We could have multiple Zoom calls, etc. And in a few calls internally, we might reach out to other experts in the field that either we find or the company provides in terms of KOLs or people who may be interested, who may be the adopters in the field of that specific technology. And if after we go through this process for a few iterations, we are still positively disposed about that company, we will bring in the remaining members of the group who are pool members but are not already in that diligence team, so that the entirety of the pool membership has exposure to that diligence. We ask them then, we write a short summary of what we've looked at, what we've already discussed, all the articles that were posted. We ask them to review all the conversations that have been happening in the interim between us and the company. And then see if there's any additional questions that they have in preparation for a vote. We might have another internal call. We might have another call with a company if need be. We may go through another set of questions if that's required. And at that point, when everybody is ready, we go to a vote. The vote is open, so everybody knows, Marcia, how you voted. And at the end of the vote, we ask you to write a statement saying, why did you vote the way that you did? And that causes everybody to really get engaged with the diligence, consider all the facts, form an opinion, and write an intelligent, supported statement as to why they voted the way that they did. And we show the progress of the vote on a daily basis. We keep it open usually because our members all have day jobs, right? So you want to make sure they have the time to review the information and vote. So we keep the vote open for several days, usually through a weekend. And then we publish the vote. And if the pool has been able to exceed its highest threshold, it will invest 20% of each of the individual's members' capital contribution. If we haven't reached the highest threshold, but we've reached the lower threshold, we'll invest 10% of each person's capital contributions. And if we haven't reached even that lowest threshold, we will make no investment. So to give you an idea, our yield in terms of the number of companies receiving investment out of 100 currently stands at below 1.5%. So 1.5 companies out of 100 receive money. Pre-pandemic, we were just over 2.5%. There are, for a variety of reasons, we are lower. We like to invest more, but it is what it is. The amount of applications we're receiving right now is pretty much at an all-time high, but our yield is at an all-time low. So it's an interesting dichotomy there.
Yeah, the market has definitely been a very, very challenging for entrepreneurs to fundraise in the last 2.5 years. So I can imagine that your numbers, that makes sense, that your numbers are up of applications and then maybe not so much on actual funding. So how
Yeah.
many companies have you funded in total over the time?
So we've funded 17 companies in total. We've had 2 exits. One company exited for 9x, another company exited. The early investors will probably get around 20x. The late stage investors may end up between probably around a 5 or 6x, which this so the late stage investors came in into the last round of that company, and that round was in 2020. And the first part of that exit was in 2023, where one of our companies sold to Stryker for just over $500 million. And so those late investors, which include both the pool number 2 and sidecar fund 1, those investors are very happy putting money into a new sidecar fund. And they've already received a return on their investment, and they will be receiving more over the next year and a half or so.
Nice. And those 17 companies were invested over what period of time?
So that's over about a 12-year, actually more like a 10, 11-year period. Of the rest of the companies, so with 2 exits, we had one company that tried to make a shift in direction during the pandemic. They ran out of money and they shut down. We have one company currently in reorganization, and the remaining 13 companies are all still alive and well. So
that's a pretty good track record. Yeah.
pretty good track record.
Mm-hmm. And life science companies do tend to take a tad bit longer, right?
It's true.
Yeah.
So when we invest, we hope to have an exit within 5 to 7 years. The nice thing about the pools and the funds is that as people join in and as new investors come in, sometimes they are exposed to an investment that's brand new to us, but sometimes, like the case of the company that just exited, they are exposed to an opportunity that is very late to us, that is a company coming back to us for a new, for its last round or a new round. And so you have a mix of both timing as well as how the risk levels and etc. So it's actually a nice mix.
That is a nice mix. Now, you had mentioned something before about that as people are interested in becoming members, they can actually come into these, is it both the pool and the sidecar fund at any
Right.
time? Yeah.
Yeah, so we created a novel structure for both the pool and the fund. And the idea for the pools originally, which was one of our members suggested it, is it's a way for the group to engage, very active conversation and discussion. And so originally pool 1 and 2 were closed-ended pools, and new members would come into the group. They loved the concept of the pools, and they were like, great, we want to join the pool. And we found ourselves saying, no, wait for the next pool to open, which is exactly the opposite of the engagement thing that we tried to create with the pool. So we spent a while talking to our attorneys and figuring out how to create an open-ended structure, which is a structure that we use for both the pool and for the sidecar fund. And so whenever we talk to people who are interested in joining us, either as members into the pool or as non-members, as co-investors into the sidecar fund, whenever they're ready to write a check, we're there to say yes.
Interesting. So you mentioned earlier that if the trigger happens and 20% is invested in a company, let's just use that as an example, it would be 20% of each person's individual contribution. So is that kind of how you figure out that structure, that it's almost like everybody has their own little account within the pool, and then you're just taking off the pool? Did I get that right? Okay.
That's right. So it's whoever that membership in the pool is at the time, each one for them, it's the respective 20% or 10%, the ratio that we go by of their initial capital contributions. You add those all up, and that's what the pool and or the fund can deploy at any given amount of time.
Okay, that is an interesting structure I don't think I've seen before. Very cool. And I like how it allows you then to get that engagement that you're talking about, because I know with some of the annual fund, we called them annual funds, but it was kind of along the same idea about voting instead of writing a check. So if you're in a very traditional angel group where you see a company, people like it, okay, now a bunch of people are going to invest, then they would have to write a check, out of their own checkbook, kind of like right then and there. And I saw a lot of investors get very fatigued very quickly because they'd be like, and some of them didn't even want to come to the meeting because they'd be like, okay, somebody's gonna ask me to vote and raise my hand and say, yes, I'm interested in this company. But then they're like, well, I don't really have money right now to invest. And so I love this concept of, still having that same collaboration of the group and being able to call on the expertise, but also being able to not feel that pressure every single time you're looking at a company, like, oh my gosh, am I going to get asked to write a check now? And like having that type of dynamic.
Right, and from a management perspective, we just didn't have the bandwidth to handle the capital calls.
Right.
And so from a psychological perspective, as you're saying, the members' money is already there and they want to deploy it. And so now they need to vote on how to deploy the funds that they're already committed. They're already there and they're already in the bank account. They don't have to, there's no capital calls.
Yeah.
So it makes the discussion a lot easier.
Yeah. Oh, that's great. Excellent. Well, Yaniv, thank you so much for coming on to the show and telling us all about Mid-Atlantic Bio Angels. This has been great. And I love hearing about what's happening in the life science space. So thanks
Thank
so
you so
much.
much for having me.
Hey, thanks for listening. To connect with me, visit my website at marciadawood.com. And if you're looking to learn more about investing in the changes that you want to see in the world, sign up for Anne and Bill Payne's ACA Angel University classes. You go to angelcapitalassociation.org, all one word, to find out the schedule. Many classes are offered, everything from the angel investing basics, fundamentals, risks, due diligence, term sheets, valuations, returns and portfolio strategy, and for a deeper dive, there are advanced classes which include capitalization tables, startup boards, and exit strategies. If you're not already a member of the Angel Capital Association, you can become one for the low price of $295 for the year, and that will give you unparalleled access to discounts, free webinars with a huge archive of content, networking opportunities, and much more. We'd love to have you join us. All content for this website is informational and not intended to serve as legal, tax, accounting, or investing advice. Well, Marcia, that's me, does serve on the SEC Small Business Capital Formation Advisory Committee. My views are my own and not the views of the SEC or my fellow colleagues on the committee. Our speakers and hosts are thoughtfully selected for their educational value, but their opinions are their own and do not necessarily represent the views of the host, me, or the Angel Capital Association, and neither specifically endorse the use of presenters' products or services. Listeners of the podcast should consult their own tax, investing, legal, or accounting advisors before making important financial decisions. All warranties, including accuracy, completeness, and suitability for specific purpose, are disclaimed.